Hello and welcome. I'm Jonathan Beale and this is the ASB Investment Podcast, a show that keeps you up to date on the market and helps you make smart choices with your investments. We've got some very special guests lined up for you today. Joining us from across the ditch is David Griffith and Jason Collins from the world's largest asset manager, BlackRock. Today we'll talk about who BlackRock are and what they do, along with how they support investors. They'll share their views on what's happening in the markets, how you can build resilience into portfolios, and how to react to the rollercoaster ride that is Trump's Twitter feed. These are entirely our own views. It's not investment advice, but we know plenty of experts at ASB that'll be happy to chat if you need. Well, welcome to Jason and David into the booth in Ponsonby. I'm really excited to have you two in here because our relationship with BlackRock goes on for a number of years. But to get you two in a booth and start talking about what's going around the world and get our customers to understand a bit more about BlackRock is really cool. So, firstly, let's start with a big thank you. But I might sort of start with you, Jason, just to tell us a little bit about your role at BlackRock and what do you do, and then we can move on from there.
Thanks, Jonathan. It's good to see you. I look after the commercial relationships for BlackRock in Australia and New Zealand. And essentially that means dealing with governments, large insurers, asset managers, banks, right through to financial planners in Australia. Here, more the wholesale clients. And in that role, look after all kinds of investments on behalf of our clients, ranging from illiquid investments, hedge funds, passive investments, active investments, right through to our technology, which deals with primarily portfolio construction and risk.
And David, tell us a little bit about your role.
Yeah, sure. So I head up investment strategy for our multi-asset strategies team for Australia. So I'm in the investment team and specifically looking after multi-asset. So within multi-asset, what we try to do is deliver outcomes for clients, whether that's, say, for example, a growth outcome or income outcome, or producing some sort of total return outcome for clients. It's really all about blending different asset classes together to achieve a more efficient outcome for clients.
In my preamble, I talked about BlackRock, largest fund manager in the world. But Jason, give us a bit of a concept. What does that actually mean for someone who actually works in BlackRock? Are you the biggest, and how does that sort of resonate with you?
Yeah, we are the largest asset manager in the world. We manage nearly $7 trillion of assets, wow. Which is a huge number, obviously.
How many zeros is that? That's
I'm not so good with zeros, ironically. Yeah, it's an incredible story. The firm started 30 years ago with, I think, 7 or 8 founders, most of which are still involved with the organisation in some shape or form, either on the executive committee or the board. So it's a founder-driven firm. You imagine 30 years ago, many other asset managers around the world, existed long before that, and BlackRock really has grown incredibly across the world in that period of time. And it's done it in a few ways, mainly through technology. It's done it through incredible scale. And I think, it was very judicious in the way that it approached risk right from the outset. And as a result, when the global financial crisis came through, whenever that was, 2008. 2008, yeah, when it came through, BlackRock just was in a very strong position. And as a few other asset managers came under pressure, BlackRock acquired, probably the largest acquisition was Barclays Global Investors, which at the time had an organisation called iShares within it, which is a large ETF provider. And so when we took over that organisation, really the business grew from strength to strength.
Some people say, large doesn't mean the best and stuff, but I suppose the one thing we've been really impressed with at ASB around with BlackRock is sort of the purpose and the values of the organisation. How's that come about and how does that sort of demonstrate itself? Yeah,
so we've always been very clear in the areas in which we play, and primarily it's as a fiduciary. So everything we do is on behalf of clients. We don't own distribution ourselves. We don't invest our own balance sheet in investments. Occasionally we might cornerstone an investment, particularly in the private equity space. But unlike other people, we're not a vertically integrated organisation. So we're completely aligned to the clients that we've got, and we're only as good as our service and performance. And if we can't maintain that service or performance, we'll lose the asset. So that $7 trillion is not money that we manage for ourselves. It's money we manage on behalf of clients like ASB.
I would probably add to that as well, Jason, just in terms of the culture, just from an investment team perspective, we've always had a culture focused on risk management. And if you think about Aladdin, our risk and portfolio management system, that's really at the core of our risk management culture. So really everyone, at least from the PM perspective, focused on managing risk in the portfolio, understanding what the risks are in portfolios, and managing that client experience is really important for us.
Now, we're looking at with BlackRock around Aladdin. Just maybe give us a little bit of a view on it. It's around understanding the risks within your portfolio and giving you so you can make better, smarter decisions. That sort of a high level view.
Yeah, I think primarily it's an operating system for investment management.
Yeah.
So investment managers, BlackRock and other external investment managers use Aladdin to run the full end-to-end process around portfolio management, placing trades, post-execution, and then at the end of it, you can look at a portfolio from a bottom-up security level to understand what you own, and then you take it a further step and do some scenario analysis around, if the Fed was to raise rates by a certain amount or reduce rates, what might happen in that scenario. So it's at its peak, it's a very complicated system for really large investment management organisations, and then simplistically it can break down just exposures that a portfolio might have to help portfolio managers better understand what they're dealing with day to day.
And so your investment management, David, and your team. So just give us a bit of a view. How many? Is that a large team, a small team, or how many globally would be an investment management team?
Yeah, for sure. I mean, so in our team in Australia, we have a team of 7 people, mixing between portfolio managers and strategists like myself. But globally, obviously, we're a bit large asset manager, so we have hundreds of investment professionals globally. So I sit with part of a broader multi-asset platform. So what we try to do in this region down here is really deliver the whole platform to our investors, both in New Zealand and Australia. But I sit within a much broader team of around 200 people globally that sit within multi-asset.
And do you? I suppose you must be sharing information globally all the time about
all the
people.
time. Yeah, there's lots of late night conference calls, early morning VCs. We have offices all around the world. The thing that I find really, really beneficial for us as investors down here, because we are so far away, I can pick up the phone and call anyone in any country and get a run through of what's been happening from their perspective. There's the daily global call that portfolio managers participate in every day, so we can get a lowdown on all the topics that are being discussed that are topical in market. So for me, it's a really good resource. And being able just to have that connectivity with the other investment teams is really helpful when we're investing here locally. Yeah.
And so you were recently this morning talking to some ASB customers at an event which was awesome. And you talked about some of the sort of things that you're focusing on and BlackRock are thinking about and some of the risks. Maybe we'll start with sort of what are some of the high-level things that are keeping you mind occupied at the moment? Yeah,
so it's very clear in the last 18 months or so, this whole issue around protectionism and US-China trade, that's really having an impact on both market sentiment in markets. You can see the sort of gyrations in market sentiment when Trump tweets additional measures in terms of tariffs. But it goes beyond that. So we're now starting to see that actually flow through and have an impact on underlying economic growth. So a lot of our leading indicators that we look at are starting to soften a bit. But pleasingly, our view of the world is that, we're not entering a recession period. Remember, markets got a bit scared in Q4 last year and they started to price in the risk of recession. Our view was very much, no, it's steady as she goes. Yes, we are seeing a softening in growth, but we do not see the level of excesses that were there back in 2007, 2008 that caused the global financial crisis. So that's sort of one theme, is that sort of impacting markets. The second theme that is on a positive side is that we have seen central banks react to that slowdown in growth, particularly the Fed. We've just saw the ECB last week cutting rates. You've also had rate cuts here in New Zealand, and we've also had rate cuts in Australia as well. So most of the central banks around the world are recognising the bit of a slowdown that we're seeing and reacting to that. So where we are in this economic cycle, we describe it as a late stage economic cycle. And, you can look through time and look and see how long these late stage cycles last for, somewhere between 1 year to 3 years. Our view with central banks coming in and being a bit more dovish around policy, that will only aid to extend this economic cycle, which has already been a very long economic cycle. So you can combine those two things. You've sort of got a lot of risks out there. I mean, trade war is just one of them. Obviously, we've got political conflicts rising with Iran and other things, spike in oil prices. These are all having an impact. You've got central banks being, reacting to that. So, and because we're late cycle, we're sort of thinking about our own portfolios and what to do in our own portfolios. And we've got this theme of resilience. How can you build some more resilience in your portfolios? We've all experienced some pretty strong returns from markets, I would say, in the last few years. We would think that we need to be a bit more modest in terms of our return expectations going forward. There
seems to be a view in New Zealand, I don't know if you're seeing it globally, that share markets have had such a good run or great run. I think the New Zealand market is probably the best performing market in the last sort of 12 months. And people are sort of going, oh, well, it's got to come to an end and stuff. But are you still quite optimistic about equity markets going forward?
I guess you can look at a few different measures. I mean, obviously look at valuations in markets. And if you look at sort of MSCI World or US equities, I mean, valuations are a little bit higher than the long run, but not egregiously high. And we're still seeing earnings coming through a little bit softer than what they were through the last couple of years, but still quite positive. And I guess the key thing to look at, if you're a long-term investor, if you look at the equity risk premium in each of these different markets, which is basically looking at your earnings yield you're getting from the earnings from the stock market relative to bond yields, which we all know are now historic lows, we're still getting 4 or 5% equity risk premium. So if you're a long-term investor, there's not too many other places in the world where you can pick up 5 or 6% earnings yield, and you can still get that from equities. So we would say, absolutely, we still prefer owning equities over bonds, but in a multi-asset portfolio, having a blend of those is beneficial. And one of the key indicators that we look at when we are building multi-asset portfolios is the correlation between equities and bonds. And we've enjoyed negative correlations between equities and bonds in the last couple of decades, which has been quite positive for building these portfolios. But that's something that we're watching quite closely.
So that's always been sort of the approach, that a good portfolio will have some equities and you have some bonds, and they'll be correlate differently, and that's actually a positive to the way you can manage your risk. You saying that that's maybe coming together a little bit, or where are you going with that? Yeah,
so I guess what I'm saying is that if you look prior to the last couple of decades, the correlations between equities and bonds are actually positive. So you're getting less diversification benefit from holding them in the portfolio. The key issue we're thinking about now is, like, we get asked a lot about, bond yields so low, do they still have a role in a portfolio?
Yeah.
And we would say, yes, bonds still have a role in the portfolio. I think we would need to think about which bonds you'd like to own in this context. Yeah, so we would say you still need defensiveness in a portfolio. Bonds can still play that role, but we need to be conscious of, the capital appreciation from here.
Yeah.
Clearly, if we are thinking that yields are going to start backing up, then that can be quite painful on the other side. But from a longer-term perspective, we think longer-term yields are going to remain anchored.
Yeah.
So having bonds in the portfolio, we think, is still beneficial. But we are starting to think beyond bonds and what other asset classes can play a role in portfolios to add that sort of defensiveness in there.
And quality, I suppose, becomes really more important. So you can go chasing some high-yielding bonds, but then the quality, I imagine, is going to be pretty poor.
Thinking exactly. So going in this stage, particularly in late cycle, going up in quality. So we find a lot of our fixed income portfolios are going up in quality in each of those different segments, and being mindful of risks. If you think about how to get yield or returns in a portfolio compared to, say, 10 years ago, you really need to push up the risk spectrum to get the equivalent level of yield in portfolio. So just really being conscious and understanding what those risks are, measuring them, and managing those risks is really important in this phase of the cycle.
Awesome. Thank you. And now, Jason, I think BlackRock came to New Zealand, back in 2013, I think we were saying earlier, was it?
Yeah, we had a nascent relationship with the Sovereign Fund in 2013, and then we started to really actively engage in the market, develop that relationship, and off the back of that really grew a broad business, and ASB was one of our first largest clients outside of the Sovereign Fund.
And what was it about New Zealand that BlackRock thought, hey, this is an area and a place that we want to come?
Well, at the time, and I remember coming to Auckland in 2013, and I'd looked at our customer relationship database, and the previous year we'd had very little engagement in New Zealand. I came to Auckland and was sort of struck with some of the building activity and thought we just haven't really paid enough attention to this market. And for those people that follow the investment markets globally, New Zealand Super has always been an organisation that's been revered by other governments around the world. So I wanted to learn the organisation a little bit better. Then I just saw a lot of opportunity. I think the economy was at a turning point, and it turned to be the case. And then we've just had a lot of support from private banks, from the multi-managers of the large banks as well. And what's been really surprising to me is the way that ETFs have sort of taken off among New Zealand investors. And one reason for that is I think the broking market in New Zealand's always been very strong. If you look at Australia, a lot of the financial planners came out of the life insurance sector, whereas in New Zealand, you've got just a very strong broking community, a real affiliation to listed securities. And New Zealanders were very happy to invest offshore and do that via listed securities through offshore ETFs. And Smart Shares in New Zealand, which is part of the New Zealand Stock Exchange, has also facilitated wrapping up some of those structures in local structures as well.
We have started to see, there was an article at the weekend, starting to see a real shift from sort of the old broking model to the funds under management model and moving to a sort of more wealth management. I think if you go back sort of 10 years, there was broking, and it was sort of, oh no, funds management isn't for me. But I think as we move and advice becomes more and more important, actually investing in multi-asset portfolios seems to be where a lot of the industry in New Zealand is starting to move. I don't know what are you seeing in Australia? Is that sort of
It's certainly moved that way in Australia, but the heritage of the organisations are different.
Slightly different.
Yeah, I'd say it is moving here a little bit as well, but really it comes down to, it can be an advice thing, but it's an execution point. And what's the easiest point of execution? What's interesting to me is in New Zealand, the exposure that you have to international asset classes, people are more willing to be passive than they are active. And I think that's really wise because, if you've got a small research team in New Zealand, it's really hard to pick active managers from here. And so that's what we've noticed a little bit more. I think in Australia, people are more interested in active exposures. It's just an interesting difference.
Yeah. And I suppose I've been super impressed with BlackRock and in our relationships early days, and you manage our sort of global equities and global property, and we're looking at other things that we can do together. But I think when we first got together with BlackRock, the thing that struck us was just the sort of alignment of purpose, the alignment of value and the focus on the customer. It really came through massively strongly. And ever since in our relationship, that's been really, really key. I suppose when you're at the size that you are, you can probably decide who you want to do business with. You don't have to do business with everybody. Is there sort of a philosophy like that at BlackRock, that this is the type of organisation we want to work with and we want to partner with?
Yeah, I think it's particularly true in New Zealand. And the reason for that is, New Zealand is so far away from the global capital market centres of the world. And so to really be effective in portfolio construction and managing money, you need to have global IP partners. And so part of the premise of the relationship was you allocated some passive exposures to BlackRock. And we like to say we gave you the keys to the castle. And so whenever you travel around the world, you go into offices and really leverage that relationship as much as possible to the benefit of your investors.
Yeah, I was lucky enough to be in UK recently and in the BlackRock head office there and stuff, and it's pretty impressive. Like, we'd been to a few other offices, and then we walked into the BlackRock one, and everyone was like, whoa, this is serious. This is like Premier League now. And
you managed to find it? It's quite a hard
It was quite a hard place to find it.
Yeah.
Google Maps was quite helpful. But and then it was just, you guys have lots of pencils, the thing I noticed, like pencils with BlackRock written on it. There was just like tubs and tubs.
We don't see those. Just clients get the pencils.
Yeah, we get all the pencils. I've got loads. I've got loads of your BlackRock pencils. They're awesome. Hey, now, rather than just talk about pencils, maybe we should talk a little bit about some of the global challenges that are ahead, maybe. And with your strategy hat on, what are some of the things that that we should be thinking about? Yeah,
for sure. Look, I think the key thing for us is, look, I think short term it seems we're okay. I guess one of the things that we're focused on is policy, and particularly monetary policy, and how much ammunition is left there. If you think about the central banks globally, they've been trying to get back into a more normal situation with their monetary policy. Typically at this stage of the cycle, you would start to see inflation start coming back to the inflation target of the central bank. So typically most central banks will target a 2% inflation or have some band around 2%. And we're just not seeing that in this economic cycle. And central banks haven't been able to raise interest rates back to a high level such that when the next crisis comes, they've got some ammunition there to cut rates. Now, the Fed is kind of there. They have been, scaling back their quantitative easing, and they've been increasing interest rates. And then so they have got some ammunition there to cut rates, and they already have started to do so. But if you look around the world, who would have thought 1% cash rates here in New Zealand, 1% cash rates in Australia, heading possibly lower. You've got negative interest rates in Europe. So central banks really need to start getting a bit more creative. Again, the ECB is starting to do asset purchases, unlimited asset purchases, 20 billion a month. what sort of incremental impact is that going to have on growth? So really starting to think more broadly. I think policymakers really need to combine and think about both the monetary policy side, but also fiscal, to sort of stave off any sort of future downturn that we might see. So we do worry a bit about, what happens next.
Yeah. And what other levers could governments pull? So they've got the central banks. Here in New Zealand, we've got 1% interest rates. There's only so far they can go. There's not much room. What sort of things could they be doing?
So, there's some central banks which have, obviously doing asset purchases, the ECB and the BOJ, and we've had quantitative easing from the Fed, but yet to be done by other central banks like RBNZ and RBA. But there is an increasing sort of topic of discussion within central banks around, should we be doing more asset purchases? What purchases should we be buying? Equities broadly, similar to what the BOJ have been doing. And then thinking about being coordinated between monetary and fiscal policy, trying to facilitate that. Central banks tend to be independent from the government, but maybe that nexus may be changing, and maybe it needs to change so that there's coordination between both monetary and fiscal. So these are the topics that we've been discussing and banting about, and not to say this is going to happen, but these are the sort of next step discussions that we think central banks will be starting to have.
And how much involvement does BlackRock have with central banks? Do you get invited in to talk to the Fed or not? Or do you get to speak to politicians or presidents? How does that work with BlackRock? You got a...
Well, I think...
you on speed dial?
No, I wouldn't say we're on speed dial. So we're a very large investor globally, and so policymakers like to hear our views on markets, like to hear our views on market structure. But, it's a pretty regulated world, and so preferential access is not something that's generally granted, but it's more a case of, the things we observe in markets, the things we are interested in is often things that regulators and policymakers want to hear, but I wouldn't say it's anything exclusive.
Yeah, I would have thought they'd said, come and talk to you more.
We do have some senior investors that are on some of the policy decision-making committees. So there is a role there that we play. Yeah, so it's something that we do.
Awesome. Now, normally in this booth I have Chris Tennant-Brown, and we can't have a podcast without him talking about Donald Trump. And so I just wondered whether you guys were pointing at Jason, that maybe how much time do a fund manager or asset manager like BlackRock spend on someone like Donald Trump, and what he's like? Chris talks about the tweets and all that type of stuff. Is it noise, or do you take a much more interest in it? Yeah,
no, definitely. You need to keep on top of it, because it's not just noise. Because when he tweets, it's actually policy tweets, and he's imposing tariffs. Who would have thought policy being conducted on Twitter? Yeah. Certainly it's something that you try to have a big picture perspective. You assess the information as it comes in each day, and you try to work out the implications of that new information and whether or not it's going to have an impact on economic growth. End of the day, we're a fundamental manager, and if fundamentals change, you need to react to that. And that's the sort of structure, and that's how you build an investment team. An investment process is around fundamentals.
Okay. And Jason, I think our relationship with BlackRock started when it coincided with the sort of cluster munitions media and stuff around KiwiSavers and potentially investing in things that we certainly shouldn't be investing in. And our timing was pretty good, actually. We moved over to BlackRock. So their sort of stewardship of money and client money is obviously a big focus of ASB, and with support of BlackRock. What sort of things do BlackRock do to help and support sort of your customers or relationships?
Yeah, I think it's a really interesting contribution that New Zealand as a country has made to the investment community, because a lot of the exclusions that ASB has asked us to make out of the portfolios we run, and for that matter, the various sovereign entities in New Zealand have spread around the world. So you started out with, ex-ammunitions, ex-tobacco, and there's a big focus on climate policy as well. So I'd say that New Zealand has certainly reached out to the rest of the world, and you've seen the first mandate exclusions occur in New Zealand, and now they're really taking place in Australia, and they're sort of spreading around the world. It's quite interesting. We call stewardship the engagement we have with organisations on behalf of our shareholders. And as I said, New Zealand's been a leader there. Our global head of stewardship is actually a New Zealander.
Oh, wow.
So she's advising, our senior leadership globally on policies and the way we should interact with companies. And our head of stewardship in Australia and New Zealand's actually in New Zealand at the moment, seeing chairs of various boards and having discussions around topics such as diversity and inclusion, remuneration policies. And what we tend to do is find out best practice around the world. And if I could distill into one thing, it's probably purpose.
Yeah.
So what we're asking organisations to do is really identify their purpose, their long-term goals. And we find that if purpose is very well articulated to the investment community, then companies become more investable.
It's interesting because the bank have moved to purpose, and with Victoria starting as the CEO and saying, we've got what is actually ASB here for? It's been here for 172 years. It's going to be here for another 172 years. But why are we here? And what part are we playing in ASB for our customers? So it's a really very fresh and different way of thinking about it. But it's very similar, I suppose, to the way we think about managing money around what are our beliefs. And we have sort of 6 investment beliefs that you guys will know really well. But it actually gives you almost gives you that framework, doesn't it, to make decisions on how you're going to do stuff. That's really similar to the way that BlackRock think about how you do stuff.
Yeah, we have some principles that we have embedded, and being a fiduciary to our clients is probably the biggest one. And that's how clients trust their money with us, knowing that we're going to be a fiduciary to that money. But then we also have like the culture at BlackRock I really like, because there's other principles that are embedded from Larry and the executive committee down around being passionate about performance, being innovators, and this concept of one BlackRock working together is really important.
Now, I've always wanted to ask this question of people from BlackRock or any fund managers and stuff that actually, and it's a bit personal really, because I'm trying to think of what my 2 kids could do. And how do you end up working for a company like BlackRock and become an investment strategist? What's the path you've taken to get there, dude? How have you?
Wow, okay, that's going back a bit time. I started off as a chartered accountant to start with, and then I realised that wasn't for me.
Okay.
So I applied for a job at Bankers Trust, and then I worked my way into the investment team, and then I was working in the fixed income and currency team as a risk analyst, and then we were trading a book of active currency, and at that point in time, active currency was really taking off in Europe, so we decided to move our team over to London. And I worked with that particular group there for a period of time, and then I found my way over to BGI, Barclays Global Investors. So I came to BlackRock via BGI in London. Yeah, so coming back to Sydney, it was a new, fresh team, and I've really enjoyed sort of my stints both overseas and coming back here.
My sister-in-law used to work for Barclays Global.
Sure, yeah.
And then said, BlackRock above her. Who's BlackRock? And then now suddenly, wow, it's just really, really how things change in a short space of time.
Absolutely,
yeah. What about you, Jason? How do you... Dizzy heights.
Well, I was a bit of a lost soul, it's fair to say. And
how long do you have?
Here we go.
I didn't really start working till my late 20s. If those...
Is that when you were a professional surfer? Or
I was doing all kinds of things, planting trees in Canada, and I won't even go to some of the other roles. But those that are old enough will remember in 92, 93, it was pretty tough, and it was a recession in Australia in that time, and youth unemployment was really high. So I just travelled, did the odd job and learnt languages, and came back to Australia, started out working as a journalist, a financial markets journalist.
Oh, wow.
And my career sort of went sideways. I think my view is follow your passion and find people that you really believe in. So I never really looked at an organisation or a role. I came across BlackRock because I really believed in a few individuals there. Was happy to take any role that came along at the time, and have followed those people. And I think those people are really reflective of the organisation in general.
Yeah, that's really good advice actually, because I'm similar. I fell into financial services. I remember years ago seeing a careers officer when I was about 15. Mr. Price, I can remember his name, and he asked me what I wanted to do, and I said I wanted to be a record producer, and he goes, "You'll never be a record producer. No one from this school will ever be a record producer." And I'm like, "You've just shattered my dreams." And now I just thought, now working for a bank, actually wasn't my ideal, but I just wanted to work with people I enjoyed working with. I wanted to focus on things I enjoyed and those types of things. Actually, you end up doing the role that you actually love every single day of the week. Sounds like what you guys do as well. And the thing I've been most impressed with BlackRock is every single person I've met with BlackRock just seems a genuinely nice person and actually is there to help and want to support and stuff. So we might just leave it at that and say thank you very much, Jason and David. It's been a pleasure to have you here. I know you're only in New Zealand for a short time, so to spend 40 minutes in a hot room talking to us has been a real great pleasure, and thank you for your continued support of ASB, and I think together ASB and BlackRock can do some really cool things in the future for our customers. So thank you very much.
Thanks, Jonathan. Thanks to your clients.
Thank you.
Thanks for having us.
Cheers very much.
Great. Thank you.
Thanks for joining us today on the ASB Investment Podcast. If you have any thoughts on today's episode, or if there's anything you'd like us to discuss on future shows, please fire your suggestions through to podcasts@asb.co.nz.